Hello and welcome to tradingfloor.com's macro overview. Fourth quarter US GDP data coming out will give a strong indication of where the global recovery is heading. 2010 ended on a high with strong manufacturing and employment growth. So what will we be looking for in the up and coming GDP figures? Yvette Roper and myself have Mas Kofol, who is the macro strategist here at Saxo Bank. Welcome, Mas.
Thank you.
Now, what are we expecting with the GDP figures coming out? We've got strong figures across the board. Is that going to be in line with the GDP figures we've got coming out?
We certainly expect so. As you say, we've seen some strong numbers from the US for the fourth quarter, especially from the consumer part of the economy and also from the manufacturing sector, in particularly from the ISM manufacturing survey, which continues to show solid growth in the US. So we're actually quite bullish on fourth quarter GDP growth in the US, and we are above consensus. We look for 3.7% against consensus 3.5%, and we think the consumer is going to do most of the pulling, where we expect a 4.2% growth rate for the quarter.
Okay.
If we look more into the consumer impact there, you say that sentiment has been low. Could you elaborate a little bit more on that and the impact it has on their actual behaviour patterns?
Yes, because we are actually seeing some divergence in the consumer segment of the economy. We've seen strong numbers related to consumer spending, and particularly retail sales have been very strong in the 3 months of the fourth quarter. But consumer surveys, in particular the conference boards and also the much followed University of Michigan's consumer survey, both of them are diverging to the downside. So they are not showing that the consumers are as confident as their spending is saying. But like I'm saying, spending appears to be very strong in the fourth quarter, and therefore we forecast 4.2% spending growth for the private consumer in the US.
So we've seen solid manufacturing data coming out. Is that expected to give a contribution to the figures that we're seeing?
It is, not as much as earlier this year. While we've seen strong manufacturing growth, we think that we are starting to see the end of the inventory cycle. We've talked a lot about that, where inventories have contributed a lot to growth in the US in 2010, and inventories are likely to contribute somewhat less in the fourth quarter. However, for investment as a whole, yes, the manufacturing sector is still strong and will also contribute positively for GDP in the fourth quarter.
Excellent.
And with Americans still buying more than they're selling to foreigners, how is foreign trade expected to contribute to the numbers?
Well, as you say, we still have a very large trade deficit for the US. So in general, consumers are buying more from abroad than they are themselves selling to foreigners. But for the fourth quarter, if we look at it, then compared to the third quarter, the trade deficit actually was somewhat lower. So that means that unlike in some of the previous quarters of this year, the trade contribution to growth will actually be a mild positive, even though we have this large deficit. So that's also a reason why we actually think that GDP growth as a whole will be slightly better than what consensus currently expects.
And given the recent extension of Bush's tax cuts and jobless benefits, what is likely to be the impact there for the government sector?
We look for a mild positive contribution also from that sector. And that's what we have seen after the news came out that President Obama has come up with all these extensions that many analysts have revised upwards the GDP forecast for 2011. The extensions are not likely to be reflected in the fourth quarter of 2010. It's simply too soon, but it means that 2011 will be stronger than previously thought. But the government sector should also contribute positively in the fourth quarter.
And if we wrap up with looking into week 5, are there any other figures, data coming out that we should be looking out for?
Definitely. Even though for now GDP is interesting, next week is going to be very exciting. First of all, the Chinese, are they slowing down, or is it just a small bump in the road? We'll see when their ISM manufacturing equivalent, the PMI manufacturing, comes out next week. Also, from the Eurozone, we have the ECB setting the interest rate. There was some doubt when Trichet went out and was quite hawkish on inflation. People or the market started to price in an early hike to the interest rate. We still don't believe they'll hike the interest rate in 2011, but it's also one to keep an eye out for. And then on Friday, non-farm payrolls, as always, very interesting.
Okay, Mas, look, thanks again for your time.
It was my pleasure.
And don't forget, visit tradingfloor.com for the latest on global insights, and you can also follow us on Twitter at tradingfloor.com. Thank you, and we will see you next time.